Hello, very good morning to all and welcome to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be the Wednesday, the 23rd of April 2024. So as usual, before we start our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. So as usual, before we jump straight into the intraday technical outlook on those broad-based cross-asset classes, let's have a quick look at some very important news flow event data releases that has taken shape overnight in the US session yesterday, as well as in today's early Asia session starting from 4 a.m. Singapore time today. So what I could see yesterday, there's actually, in terms of the movement on the broad-based cross asset classes, there's actually a synchronized, I would say, a relief rally that's being seen across the broad-based cross asset classes. We start to see a very strong rally in the major US stock indices. So all the major US stock indices closed in the green yesterday, and also by the time it reached the 4 a.m. Singapore mark yesterday, it also closed near the session high. So it's a very strong intraday performance yesterday on the S&P 500, which is up by 2.5%. The Nasdaq is up by 2.6%. The Dow Jones up by 2.7%, and the Russell 2000 also up by 2.7%. So during the US session, why the US stock market rallied so hard on the upside is because of a relief that potentially there could be some de-escalation in this ongoing trade tension between US and China, where very interestingly, yesterday the US Treasury Secretary over here, Scott Bessent, mentioned that a closed door investor summit on Tuesday, which is yesterday. So after this closed door investor summit concluded, he actually made a remark to press, stating that the tariff standoff with China cannot be sustained by both sides, and the world's largest economy have to find ways to escalate. So the de-escalation will come in the very near future, Bessent said to reporters after this closed door investor summit. So because of this optimistic remark by the key US officials, that is also one of the part of the team that is driving this ongoing US trade tariffs with the rest of the world and China as well in terms of policy implementation, because of his positive optimistic remark that there could be some form of this de-escalation of this ongoing trade tension between US and China, and they may come in a very, because of this, we call very near future. So that causes the US stock market to spike up. So upon seeing the US stock market to spike up, the US dollar also recovered as well. Yesterday, you see there's a sharp recovery in the US dollar as well over here during the entire US session yesterday. And with the recovery in the US dollar, we start to see a safe haven instrument like the yen got sold off, the Swiss franc got sold off, and as well as the precious metal gold got sold off as well. All right, so gold yesterday also dropped by 1.3%. So there's a fall in gold 1.3% after printing a fresh all-time high at 3,500 for XAU/USD. And yesterday fall in gold of negative 1.3% is the worst daily performance since 7th of April. All right, so yesterday is more like a intraday risk-on appetite revival, causing the US dollar to recover, the US stock market to stage a intraday rally, and correlated indirectly a sell-off in safe haven instrument like the yen, the Swiss franc, and gold. All right, that actually saw that reversal of fate. And what's interesting over here in today's Asia session as well, at the start of today's Asia session, the Nasdaq 100 futures and the S&P 500 E-mini futures, both of them gap up in the Asia session, also supported by now Trump himself. So it seems to us that there's a lot of news flow that is causing this erratic movement in the market, and this news flow is unpredictable news flow. All right, so Trump, what Trump did over here is that at the close of the US session, that means then before then he mentioned to reporters stating that he has now no intention to firing Fed Chair Powell. Still recall that over the weekend, why he actually upped his rhetoric, saying that Powell is not doing a good job and he's exploring option. Is there any way in the U.S. Constitution to remove Fed Chair Powell ahead of his tenure end in the U.S. Federal Reserve, which is somewhere around in May 2026 next year? So yesterday he backed down his trade, stating that he has no intention of firing Fed Chair Powell, and this remark happened after the closure of the U.S. stock market, and that causes the S&P 500 E-mini futures and the Nasdaq 100 E-mini futures all jumping by extending its rally by 1.5 to 1.6% each. And because of this positive feedback loop in the Nasdaq 100 futures in today's early Asia session, that create a cascading positive impact in the entire Asia Pacific region, where you see the Nikkei 225 is now up by 1.7% as we are speaking. The Hang Seng also broke above our short-term pivotal resistance yesterday, even before Powell's speech. It broke in the US session. Now it's up by 2.4%, and the rest of the other Asia region is also in the green as well, with the KOSPI 200 is up by almost 4%. The AXX Australia 200 index is up by 1.6%, and the STI Singapore Straits Times Index is up by 0.9%, all pretty much jot up by this optimism of the US White House administration. Number one, de-escalation of that US China current heightened trade tension, where the US Treasury Secretary is saying that this de-escalation may come in the very near term. And also, right after the US session, Trump mentioned that he has no intention of firing Fed Chair Powell. So that causes the recovery in US asset, recovery in the dollar, recovery in the US stock market, sell off in the gold, because that was the prior team play in the last few weeks. It's a reversal, and we start to see also a positive risk on impact on the major Asia stock indices as well. And one thing I want to highlight over here is that on a longer term picture, on a fundamental picture, yesterday IMF issue its latest updated global growth economic forecast. That means in its what I call that its semi-annual outlook report is the updated one. So IMF slashes growth forecast and warns that trade war risk worsen outlook. All right. So the IMF actually lowered the global growth forecast over here. So it cuts its projection for global output growth, that means global GDP this year, to 2.8% in its updated World Economic Outlook report released yesterday. So this latest forecast is lower than in the January forecast of 3.3%, and would be the slowest expansion of global GDP growth since the COVID-19 pandemic in 2020, and it will also be the second worst figure since the onset of the great financial crisis, GFC, in 2009. So despite this, we call it a downgrading of growth forecast significantly by international world body IMF, market choose to ignore this growth forecast and totally focus on the latest rhetoric from US White House administration and Trump himself by pushing up the current risk on we call it a situation. So can one day of a price action totally change the trend of the major US stock indices or the global risk appetite behavior? I will say that from a technical analysis perspective, we got to take things one step at a time, because we got to see clearance of several levels to actually more or less have a better view whether the technical trend has changed on the major US stock indices. So later I'll cover that in step by step as we go through the intraday technical outlook of these various major indices from here. All right. So with that, that actually sum up the intraday. Got the first segment of today's. Oh yeah, one more segment we cover is pertaining to one of the mega cap stocks released yesterday, which is Tesla. So very interestingly, Tesla as well also didn't actually move accordingly to its individual, we call it a firm-based factor. In fact, Tesla yesterday, after the close of the US session, reported its revenue, both on the revenue earnings, top and bottom. That means the revenue, which is the top line, the bottom will be the net earnings per share. Both of them actually miss market expectation. So the earnings per share is based on the adjusted one is at 27 cents. Market is expecting 29 cents. The top line revenue market is looking at 21.11 billion. It only came in way below expected at 19.34 billion. So despite the revenue and earnings, we call it despite the actual figure of revenue and earnings did manage to meet market expectation, and in fact it fall below market expectation. Tesla stock TSLA share price, instead of falling in the aftermarket after session, it actually extended again. During the normal US session, it was at 4.6%, but instead of falling, despite it missed its revenue and earnings per share, it actually added on to the normal hour gains in the after hours by 5.4%. So the reason why it's actually rallying so strongly in its stocks, because it's more of a macro factor related news, which is the optimism that is being created by US President Trump himself by stating that he has no intention of firing Fed Chair Powell, and also yesterday's Bizet, Treasury Bizet, we call it a statement or remark. Very interestingly, it happened after the his has a conclusion with the closed door investor summit with various participants, that he mentioned in the press that there could be some signs of de-escalation between US and China in this ongoing trade war in the very near future. So that causes the Tesla stocks to rally in the after hours, ignoring their weaker than ignoring its earnings that came in below expectation. And also Elon Musk himself also mentioned that he will limit himself with the government. That means he will actually spend more time with his company rather than spending time with the current US White House administration to promote efficiency by slashing government employees. So that also offer a relief by Tesla investor as well, that saying that the key man himself will be more focused on his day-to-day duties in his company. So that also one of the reasons people explain that Tesla stocks rallied. Okay, but nevertheless, why Tesla stock is important? Because it's one of the key component stock in the S&P 500 and the Nasdaq 100. So that also created a positive feedback loop into the Nasdaq 100 futures and the E-mini futures, that is adding on gain in the Asia session as you're speaking right now, up by now down slightly. The S&P 500 E-mini futures is down by one, just now was 1.6, so but it's still up by 1.4%. The Nasdaq 100 continues to remains firm at 1.6%. Okay, this is the E-mini futures trading during the Asia session right now as we're speaking. Okay, so with that, now let us now focus our attention to the second part of the daily dose of market insights, which is the intraday technical analysis on those broad-based cross asset classes. So let us start with the FX market first over here. So let me expand my screen. Okay, so let's take a look at the FX market. All right, so before that, before jumping into the individual dollar major pair, let's have a look at the 5-day rolling performance of the US dollar. So you look at the 5-day rolling performance of the US dollar over here. So you see the dollar rallied after that. Then after that, in today's start of the Asia session, there's a spike up in the dollar strength as well. Over here, you see this spike up in the dollar strength. So this spike up in the dollar strength is by the remark from President Trump himself, where he mentioned that he has no intention of firing Fed Chair Powell. So that causes minor bullish reversal in the US dollar across the board in almost all the other major currency. Then thereafter, this rally is not able to sustain. Then you see the dollar losing some of its gains that is being seen in the first 2 hours of today's Asia session, around 5 a.m. to 7 a.m. mark. Okay, the dollar strength starts to get a bit of winding off. So you look at the 1 day rolling performance, that will be very obvious. So you see the dollar strength starts to dwindle downwards after it spike up. So all the way from 7 a.m. all the way right now as we're speaking, the dollar strength starts to subside over here. So market participants, if you look at the FX market participants, they are so not convinced about a potential significant bullish reversal in US dollar strength over here. So if we look at the individual chart right now of the euro dollar, starting with the euro dollar, so far the euro dollar continues to trade above its 20-day moving average and above its 50-day moving average over here. All right, and this sell off in the euro dollar managed to find support at the previous minor swing low area, or this minor range support that was formed in 16th of April to 17th of April. All right, as you can see, all right, over here. So it managed to actually stage a bounce as well. All right, a bounce. All right, over here by forming a bullish. Okay, let me expand my screen. Yeah, a bullish hammer candlestick at the 6 a.m. hour mark in today's Asia session. All right, so with that, I'll be using, given the appearance of this bullish element right at this former graphical minor support area at 1340. So this will be my short-term pivotal support for today. I'm watching 1340 short-term pivotal support on the euro dollar, given that because it's managed to survive at this bounce over here, and the RSI now has starts to exit from the oversold region. I'll be using 1340 over here to have a intraday trend bullish bias for today on the euro dollar. First resistance it got to surpass very quickly will be yesterday's intraday bearish breakdown during the US session at 1480. A clearance above 11480 will increase the probability of today's intraday trend bullish bias, exposing the next near-term resistance at 11580 next. All right. However, if price action starts to swiftly break down the 11340 with an hourly close below it, then this minor decline may extend to the downside to shape into a minor mean reversion decline sequence, exposing the next near-term support level at 1.1270, followed by 11190 next. All right, so that's for the euro dollar. Up next will be the sterling dollar over here. So the sterling dollar also came down and shaped that rebound right above this key minor congestion area of 3rd of April to 17th of April. Okay, at 3205. All right, 3205 over here. So with that, this will be my short-term pivotal support level at 13205. So 13205, that will be my short-term pivotal support. So with that, I will have a intraday trend bullish bias using 13205 on my sterling dollar. uh, this this push up over here will be okay. So what we'll do over here is that this will be my short-term pivotal resistance at 13360. All right, okay, okay, give me a minute. Okay, sorry about that because there's some technical thing. So let me repeat myself on the sterling dollar. So the sterling dollar over here, give me a minute. Sorry about that. Okay, I repeat my sorry about that because there's some technical problem over here. So I hope that my thing is okay. All right, okay, good, good. All right. So 132.05 short-term pivotal support level. So this will be my short-term pivotal support level on the sterling dollar. So with that, I will still have a trend bullish bias on the sterling dollar. Then I will have a intermediate resistance at 133.60. So this will be the level where it got broken down in yesterday's US session, and price action got to shape a push up pretty quickly at as soon as at 133.60 with an hourly close above it to increase the probability of today's intraday trend bullish reversal. To seek to actually have this 130 next intermediate resistance to come in at 134.35. All right. So however, if price action starts to have a hourly close and the breakdown below 132.05 today, today's intraday trend bullish bias will be invalidated to see the extension of a potential mean reversion decline sequence, exposing the next near-term support level at 131.30, followed by 130.30 next, which also correspond to the rising 20-day moving average. All right. So next up will be the Aussie dollar. So the Aussie dollar continues to be very, very choppy. So initially it managed to clear above the 64 level, which is the former medium-term pivotal resistance. So that is the former major. Okay, let me put it in the daily. The daily chart will be much more clearer. All right, this is the daily chart. So what we could see over here is that this is the 64 pivotal resistance level. So it didn't have it cleared above it on Monday, but then after it didn't have a positive follow through and it broke down and formed this bearish candlestick right below this 64 medium term pivotal resistance level again, and also right at this dotted gray line. So this dotted gray line over here is the former major ascending trend line that I drew from the low of 12th of October 2022. So that was the former so-called major range support, and it was broken down on the 10th of December last year. That ever since it's broke down, every time the price attempt to retest at the 64 figure level, it got rejected. On 21st of April, it got rejected on 17th of March, slightly below it, and it got rejected on 3rd of April. Okay, and yesterday I consider this as a whipsaw again on the Monday. All right, so Monday close above, but on Friday, on Tuesday, they managed to have a proper, we call it positive follow through, and it formed a bearish candlestick and closed right below the 64 figure level. So with this so-called unclear price action that is being formed in the last two days of Monday and Tuesday, that not convincingly able to break above the 64 figure level, I will not be so convinced right now that it may starts to push up further towards 64.70. So with that, I turn into a short-term neutrality stance today on the Aussie dollar. So neutral between 64 figure, and on the downside will be at 63.35 over here. So using these two neutrality stance of here, between 64 figure and 63.35, I will flip to a neutrality stance again on the Aussie dollar, unless on the short-term intraday basis we do have an hourly close below 63.35, then potentially the Aussie dollar may see a further potential downside on the intraday basis to expose the next near-term support at 6280/6250 next, which correspond to the 50-day and the 20-day moving average, acting as the similar graphical support as well. So in a nutshell, because of this unclear price action in the last 2 days, that it can't convincingly break above the 64 figure level and reintegrate back below it. On a very short-term intraday basis for today, I will flip to a neutrality stance between 64 figure and 63.35 on the Aussie dollar. All right. So next up will be the dollar yen. So the dollar yen, after hitting the 140.30, 140 figure level, it managed to stage a bounce over here. And after staging a bounce, it actually cleared above our Titan short-term pivotal resistance at 14170. All right, but managed to actually stage a bearish reaction right at the former bearish pennant previous, we call it support, broken down, now turns into a pullback resistance at the 14320 level. All right, 14320 level over here. So with that, I'll be using this 14320 level as my short-term pivotal resistance level. With that, I was have a intraday trend bearish bias on the dollar yen. First support level it got to cleared will be at 141 010, 141.10. Okay, let's put it in writing. 141.10. Okay, 141.10 over here. So 141.10 will be, this is a short-term pivotal support at 141.10. So 141.10 level, this will be my first support level to watch, 141.10. Then after breaking down below 141.10, it may re-expose 140.30/140 figure again before 139/138.70. So all in all, I'll be using this 14320 as my short-term pivotal resistance for today to have a intraday trend bearish bias on the dollar yen. But in order to increase the odds of this trend bearish bias, it got to break down fast below the 141.10 first support level to watch out for. However, a bullish reversal again and a hourly close back above 143.20 that would invalidate today's intraday trend bearish bias to kickstart another round of mean reversion rebound sequence on the dollar yen to retrace back towards the 20-day moving average. In first step, 141.10 before 145.10 next. All right, so that's for the dollar yen. Okay, next up will be the intraday technical outlook on the major stock indices over here, starting with the Hong Kong 33. All right, so the Hong Kong 33 yesterday, we do have a Titan short-term pivotal resistance at around the 21,450 level. So this level has been convincingly broken up on the upside, and price action right now also now trying to break out above the 20-day moving average, I think as a near-term resistance level as well. So, and this was today's morning gap up. So the gap up will be my first support level to watch, will be at 21,740. So I'll be using 21,740 as my gap up over here. This is the gap up support level, first support level to watch. Yesterday's pivotal resistance now will be turned into a key pivotal support level at 21,450. So as long as 21,450 short-term pivotal support holds for today, we'll flip to a intraday bullish trend bias stance for the Hong Kong 33 representing the Hang Seng Index. First intermediate resistance to watch will be 22,220/22,500. This is a zone above 22,500. May see the next intermediate resistance coming in at 22,990 next, which is this former minor congestion area of 31st of March and 2nd of April. Only hourly close and a breakdown below 21,450 would invalidate today's intraday bullish trend bias. Let me say that yesterday is a failure bullish breakout move and start to see another round of choppy minor corrective decline sequence resurfacing on the Hong Kong 33, exposing the next near-term support level at 20,840, followed by 20,280. So given the positive technical element that is being seen on the price action of the Hong Kong 33, we will flip to a intraday bullish trend bias stance using 21,450 as my short-term pivotal support level. Next up will be the Japan 225. So Japan 225, this is Japan 225. Japan 225 will be representing the Nikkei 225 over here. So given the fact that yesterday we have a neutrality stance and it broken above the neutrality stance and it cleared above the 20-day moving average as well. As you could see over here, there's this clearance, and right now is attempting to actually retest the 20-day moving average, okay, and managed to stage a bounce as we are speaking at the 34,860 level. So with that, I will flip to a intraday trend bullish bias for the Japan 225 for today using 34,315 as my short-term pivotal support level, which is also correspond to this minor ascending trend line that I link up the lows of 7th of April, 9th of April, and as well as yesterday's 22nd of April, right? I think as a graphical support at this 34,315 level. So as long as 34,315 level holds, we will have a intraday bullish trend bias on the Japan 225. Next resistance level to watch will be at 34,730. A breakout above it may see the next intermediate resistance coming in at 36,450, which correspond to the 50-day moving average as well. Only a push down and hourly close below 34,315 that would invalidate today's intraday trend bullish bias to see another choppy corrective decline sequence, exposing the next near-term support level at 33,680. Below it may expose 32,425 next. All right, so that's for the Japan 225. Next up will be the Germany 30. So the Germany 30 also managed to clear above the short-term pivotal resistance yesterday, which is at 21,450, and as well as the 20-day moving average as well. So with that, we will actually start to see a potential we call it extension of this minor rebound sequence back towards the 50-day moving average, again potentially because of yesterday's strong push up. So with that, we'll flip to an intraday trend bullish bias on the Germany 30 using 21,540 as my short-term pivotal support level. Resistance level to watch will be this 50-day moving average, I think, as the next intermediate resistance level, also confluencing with the previous gap down, the gap resistance over here at 22,240. All right, only above 22,240 may see a further extension of this mean reversion rebound sequence extending to the upside to expose the next intermediate resistance at 22,680, which is the minor swing high area of 28th of April and 1st of April, and as well as this descending trend line that I drew from the high of 18th of March, connecting to the next lower high at 26th of March, acting as a similar resistance level at 22,680. However, if price action starts to have an hourly close and a breakdown below 21,540, today's intraday trend bullish bias will be invalidated to revive the bearish tone on the Germany 30 in first step, exposing the next near-term support level at 20,890, which is the congestion area of 11th of April and 14th of April. All right, so that sum up the intraday technical outlook on the Germany 30. Next up will be the major US stock indices. So let's start with the US Wall Street 30. So the US Wall Street 30 yesterday managed to pierce up above our short-term pivotal resistance at around the 39,200 level. So yesterday we do have a very tightened short-term pivotal resistance over here at the 39,140 level mark. Our price action pierced up today's gap up because of Trump's remark stating that he will back down on not to fire US Fed Chair Powell, then that causes the push up in the US Wall Street 30. So, but this push up did manage to surpass the 20-day moving average, which is still downward sloping over here, and we still has that bearish cross that is in play where the 50-day moving average is still trading below the 200-day moving average after the bearish crossover that was formed on last Wednesday. So with these two negative technical elements still intact, I do have a pivotal resistance level to watch out for today, which is the 20-day moving average, and as well as if we do the Fibo retracement of this last minor leg of sell off for 15th of April all the way down to Monday US session swing low that correspond to the 76.4% Fibo retracement. So using this pivotal resistance zone for today, 40,070, 40,380, which is the 20-day moving average, acting as the intermediate resistance level. So it will be a zone to watch out for today. Near-term support level will be 39,300. All right, so using 40,070 slash 40,380, so we still maintain that intraday trend bearish bias on the US Wall Street 30, but in terms of this kind of probability will be not be so high unless we start to see a sudden push down below this gap support level that is being formed in today's Asia session at 39,300. Then the odds will increase for this intraday trend bearish bias. So below 39,300 may expose 38,820 next on the intraday basis. So that is the low of yesterday's US session. Okay, so these are the two key support level to watch out for. Unless we start to see a very drastic breakdown below 38,820, then the next near-term support level, that means there will be an increase in the probability of that intraday trend bearish bias to retest Monday US this Monday US session swing low, which is at 37,900. However, if price action starts to shape a bullish reversal again and break out above 40,380, the upper limit of today's short-term pivotal resistance, which is also the 20-day moving average, then we may see another round of mean reversion rebound sequence unfolding on the US Wall Street 30, initiating the next intermediate resistance to come in at 40,910. Above it may see 41,740 next, which is the correspond to the downward sloping 50-day moving average. So that's for the US Wall Street 30. Up next will be the Nasdaq 100. So the Nasdaq 100 over here also shaped a push up, and it also cleared above our Titan short-term pivotal resistance at around the 18,300 level that we highlighted yesterday. And what it did over here is that it managed to actually pause stall right exactly at the 20-day moving average, right? So there's some kind of storing over here by the price action of the Nasdaq 100 as we are speaking right now. So despite the gap up in today's Asia session, the gap up didn't surpass the 20-day moving average and did a kind of a inverted V-shape bearish reaction. So with that, I'll be using this zone here as my pivotal resistance for today, 18,820, which is the 20-day moving average, and the upper limit 19,960, which is the which is the minor swing high area of 14th of April that kickstart this latest leg of down move on the Nasdaq 100. So this will be my pivotal support level, a pivotal resistance level to watch out for, to have a not so low probability intraday trend bearish bias for today. Okay, first support level, it got to surpass below it very quickly, 18,350, which is the gap support that has been formed in today's Asia session at the start, the gap up over here. So at hourly close below 18,350, that will increase the probability of today's intraday trend bearish bias to revisit yesterday's US session low at 18,125. A breakdown below it further increases the trend bearish bias to revisit 17,410 level. So let me have a zone. So this is yesterday's Monday Asia session low. So it will be at 17,600 slash 410 level over here. All right. So with that coming into play, we will be monitoring this pivotal resistance zone very closely, and as well the 18,820 slash 19,060. First support level to watch it will be 18,350. But however, if it starts to have a hourly close, that means a sudden bullish reversal from here and breakout above 19,060, today's intraday trend bearish bias will be invalidated to see another round of mean reversion rebound sequence unfolding again, exposing the next near-term resistance, 19,280, followed by 19,800, which is the downward sloping 50-day moving average. All right, so that sum up the intraday technical outlook on the major stock indices. Let us now turn our focus towards the commodities market, starting with gold XAU/USD. So for gold XAU/USD, yesterday price action tumbled downwards over here. So this tumbling downwards of price action still managed to survive at the former minor swing low of 17th of April at 32,870, 32,887, but it broke below our Titan short-term pivotal support level at the 3,420 level yesterday. All right, so this 32,887 level, if we do the Fibo retracement of this last rally from the low of 8th of April, the recent rally from 8th of April, because previously there's a pullback. So after this pullback, the price action continues to trend higher. So from 8th of April all the way up to yesterday's 3005 all-time high area, that constitute with the 38.2% Fibo retracement. And with the hourly RSI also starts to exit from the oversold level over here. So for today, we do have a intraday trend very bullish bias over here, because it managed to bounce, it came very close to the 3287 level over here, because no point playing a short-term pivotal push down at this 3287. So using this 3287 as my pivotal short-term pivotal support for today, we do have a intraday trend bullish bias as long as 3287 did surpass on the downside. First resistance that to watch out for today will be yesterday's Titan short-term pivotal support, now turns into a key intermediate resistance at 3420 level. All right, so only a breakout above 3420 level may revisit the current all-time high area at 3005. All right, that's the two key resistance level to watch out for today. So let me put it in writing so it's much more obvious. 3,420 followed by 3,500. All right, so only a push down and hourly close below 3,870 may invalidate today's intraday trend bullish bias to see the extension of this mean reversion decline sequence, exposing the next near-term support level at 32,420. Below it sees 31,194 slash 3162, which correspond to the rising 20-day moving average. All right, so that's the intraday technical outlook for gold, using 3287 as my short-term pivotal support to maintain today's intraday trend bullish bias. But first resistance it got to surpass fast will be at 3420. So that's for gold XAU/USD. Lastly will be the West Texas crude oil. So West Texas crude oil continues to actually trend higher yesterday. In yesterday's we call it Asia session and even the US session. And what I could see over here is that the RSI has starts to form a bearish divergence. Okay, hitting the overbought, then thereafter a lower high, the price actions trend a higher high over here. Okay, so that is a bearish divergence, indicating the lack of upside momentum right below the 20-day moving average, coinciding with our pivotal resistance at 65.40 yesterday. So still no change, still using 65.40 as my short-term pivotal resistance level. And given the latest bearish reading on the hourly RSI, we'll still maintain today's intraday trend bearish bias, with first support level to watch still unchanged at 62.39. Only a breakdown below 62.39 may expose the next near-term support level at 60.08. However, if price action has a bullish breakout and the hourly close above 65.40, today's intraday bearish bias will be invalidated to see the continuation of a potential extension of this mean reversion rebound sequence that is in place since the low of 9th of April, to have the next intermediate resistance coming in at 68.05, which correspond to the downward sloping 50-day moving average. Above 68.05 may expose 70.42 next, which is the minor swing low area of 3rd of April. Right, so that sum up the intraday technical outlook on the broad-based cross asset classes. So before we go very quickly, let's take a look at the economic calendar. What are the key data to look out for today, Wednesday? So for today, Wednesday, it will be the PMI day for the major developed nation over here. So in the European session at 3:30 p.m., we have the Germany PMI data. So it's the preliminary PMI data compiled by S&P Global. So that will be out at 3:30 p.m. for manufacturing and as well as services. So that could influence the euro dollar and the Germany 30. And at 4 p.m. will be the aggregated Eurozone 1. Uh, the manufacturing PMI and the services PMI as well. So they will be the preliminary reading. Then at 4:30 a.m. we have UK manufacturing PMI and services PMI, and the all important US one will be released at 9:45 p.m. The manufacturing PMI and services PMI. And before that, we do have three officials speaking. Fat Bet, Fat Gooseby, Fat Wheeler speaking at 9 p.m. and 9:35 p.m. All right. Then also we have the weekly EIA crude oil stockpile change that could influence the West Texas crude oil that will be out at 10:30 p.m. All right. So then we have 2 a.m. We do have Bank of England official speaking, Braden, at 2 a.m. and followed by 3:15 and 3:45 a.m. Two ECB officials will be speaking as well over here. So with that, then we do have economic calendar. Let's look at the earnings calendar. If I'm not wrong, there will be three US semiconductor stock reporting today that could influence the Nasdaq 100, given that semiconductor do have a heavy weightage in the Nasdaq 100 in terms of sector. So today will be Wednesday. Yes, Texas Instrument. So Texas Instrument will report their Q1 earnings after the close of today's US session. That means, i.e., after 4 a.m. Singapore time tomorrow. That means Thursday. All right. Then Boeing will report its Q1 earning before the start of today's US session. So that could also influence the more on the S&P 500 and as well as the Dow Jones Industrial Average. All right. So that sum up today's daily dose of market insights. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.